Collective research. Active fundamental research in global capital markets. Make informed decisions.
Microsoft Corporation is an American multinational technology corporation headquartered in Redmond, Washington. Microsoft's best-known software products are the Windows line of operating systems, the Microsoft 365 suite of productivity applications, and the Edge web browser. Microsoft ranked number 14 in the 2022 Fortune 500 rankings of the largest United States corporations by total revenue. It was the world's largest software maker by revenue as of 2022. It is considered one of the Big Five American information technology companies, alongside Alphabet, parent company of Google, Amazon, Apple, and Meta platforms.
Microsoft Corp. On Sept. 19, 2023 announced that its board of directors declared a quarterly dividend of 75 cents per share, reflecting a 7-cent or 10% increase over the previous quarter's dividend. The dividend is payable December 14, 2023, to shareholders of record on November 16, 2023. The ex-dividend date will be November 15, 2023. In addition, the company announced the date for the 2023 annual shareholders meeting, to be held on December 7, 2023. Shareholders at the close of business on September 29, 2023, the record date, will be entitled to vote their shares. This year's annual shareholders meeting will be held virtually and hosted by Satya Nadella, Chairman and Chief Executive Officer, Amy Hood, Executive Vice President and Chief Financial Officer, Brad Smith, Vice Chair and President, and Sandra E. Peterson, Microsoft Lead Independent Director.
Microsoft has experienced robust financial growth during this period. The company has been able to increase its net sales, net income, and operating income consistently, with relatively high growth rates in the years 2020 and 2021. However, in 2023, there is a slight decline in net income despite an increase in net sales and operating income. This could be due to various factors, such as increased expenses or changes in the business landscape.
The increasing total assets indicate the company's ability to expand its asset base, which can be a sign of business growth and investment in various opportunities. Total liabilities. Increasing total liabilities may suggest that Microsoft is taking on more debt or other obligations. It's important to monitor this trend to ensure that it remains manageable. Debt-equity ratio. Microsoft has been successful in reducing its debt-equity ratio over the 5-year period, which is a positive sign. The decreasing trend in the ratio indicates a reduction in financial leverage and reliance on debt financing. The data suggests that Microsoft has been managing its financial structure effectively. They have been able to increase their assets while keeping liabilities in check, leading to a decreasing debt-equity ratio. This indicates a healthy financial position and prudent financial management, which can contribute to the company's stability and ability to invest in growth opportunities.
Quick ratio. In 2019, Microsoft had a quick ratio of 2.35, indicating a strong ability to meet its short-term liabilities without relying on inventory. The quick ratio has decreased over the years. Current ratio. In 2019, Microsoft had a current ratio of 2.53, indicating a strong ability to meet its short-term obligations. Similar to the quick ratio, the current ratio has decreased over the years. The quick ratio and current ratio for Microsoft have both decreased over the 5-year period, indicating a reduced ability to meet short-term obligations using highly liquid assets, quick ratio, and all current assets, current ratio. However, it's important to note that both ratios remain comfortably above 1 in all years, which generally suggests that Microsoft has had sufficient assets to cover its short-term liabilities. The declining trend in these ratios may be due to various factors, including changes in the company's asset composition and short-term liabilities.
P/E ratio. The P/E ratio indicates that in 2019, Microsoft's stock was valued at 26.16 times its earnings, and there have been fluctuations over the years. In 2023, the P/E ratio is relatively high, indicating that investors are willing to pay more for each dollar of Microsoft's earnings. This suggests positive market sentiment and higher expectations for future earnings. P/S ratio. The P/S ratio indicates that in 2019, Microsoft stock was valued at 8.16 times its sales revenue, and it has generally trended upwards since then. The increase in the P/S ratio suggests that investors are willing to pay more for each dollar of Microsoft's sales, indicating positive market sentiment and expectations for strong revenue growth. The data indicates that Microsoft stock has experienced fluctuations in its P/E and P/S ratios over the years. The higher P/E and P/S ratios in 2023 may reflect positive investor sentiment and higher expectations for the company's future earnings and sales. If you would like us to research a stock, please tweet at Collective REC or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective Research. Active fundamental research in global capital markets. Make informed decisions.